Hi, it's Rob Booker. It's Sunday, July 1st, 2012. I'm here with Scott Welsh. Hi, Scott.
Hey there.
And we're taking a look just to start things off tonight at the Aussie yen, but we'll look at a whole lot more besides this. We're glad that you're here this evening, and if you're watching the recording, we're glad that you're joining us later. Many people who would ordinarily be here, Scott, I think are in the same position as you. They're worried about more important things than Bossilator readings tonight because they're either out of power or worse. And we hope that all of those of you that are here are doing all right. And Scott, we're glad that you're here.
It's rough out there, but we're hanging in. We'll look at some trades anyway.
All right. There's a whole lot that is ready to trend, but there isn't a whole lot, Scott, in the world of Forex that is counter-trending. And so tonight's webinar is naturally geared toward the trending phases of the Bossilator methodology. But there's some statistics and other really cool stuff that we want to talk about tonight, and we're glad to have everyone here together with us. And this is the Australian dollar Japanese yen on the 5-minute chart. We could almost look at any time frame chart we want to look at and find trades, but by looking at the short-term market, we're going to get a chance to see, I think, quite a number more. If the Australian dollar Japanese yen falls to the 38 fib retracement on this 5-minute chart, or in other words, at approximately 81 even, and I'll write this number on my screen right here. This would just be perfect, actually. 81 even. That's a buy trade on the trending phase of the market for the Bossilator. So a bounce off of 81 and above, that would just be spectacular. If it falls further below 81 and we stop out and get another crack at it, the level 80.70 is also spectacular, and both of these numbers are just fine, thank you very much. And a bounce off of either one of those levels would be fantastic. The safer entry is the lower entry at the 50% retracement. It waits a little bit longer, and you can see some spectacular support and resistance at this level here where the market consolidated a bit. And this is simply a fib retracement that starts at the low that was made the last time it was at the 800 period simple moving average to the high that it has made so far as it has traveled above it. And then we wait for it to drop back down lower and hit one of these fib retracement levels. This, on a variety of methodologies that I trade and have traded over the years, this is a trend trade entry across the board pretty much, and I'm very interested in this trade. And the Australian dollar Japanese yen is a nice fit because the interest rate in Australia is significantly higher than the Japanese yen. Aussie bullishness is indicative of a risk-on economy, which it seems like the move was at the end of last week. And the Japanese yen is really a not going anywhere type of currency. So this is a perfect match, something that could be potentially very strong matched against something that has been essentially traditionally very weak because of its interest rate. Japan's at a zero interest rate policy now for, I don't know, it's probably more than 10 years. I don't know exactly, but it's been quite a long time. And here we are. So that's a really nice match. That's the trade. If we don't get a retracement down into those levels, then this is the type of trend that is so strong that we're just not going to get a chance to enter on this type of a Bossilator trade. And you could look at a number of other types of options to see an entry on that. We could see the radar screen to look at some other potential entries. So I'm just clicking on the radar screen here. I had it up a moment ago and it disappeared, but I'll sort them. You can see here, Scott, if you sort the 5-minute chart or anything, there's just nothing overextended right now. It's very odd.
Yeah, nothing for counter trend, but like you said, you
Right.
can still get great trend trades. And I do a lot of my trading, if not all of my trading right now, on the trend trading. So nothing wrong with that.
Nothing wrong with that at all. Here's the euro dollar on the 5-minute chart. So I'm going to switch over to that. Same situation here. And we draw a fib retracement from the lows made the last time we were at the 800 to the highs made so far as it jumped up above the 800. And we're touching the 23% retracement now. And the reason I'm showing this chart is if you don't want to wait on the Australian dollar Japanese yen for a move down because you don't think that it's going to be able to get there, well, you're at a level of essentially support and resistance on this euro right now. If you want to take an early entry here, a smaller trade perhaps, and get a move up, that's a possibility. I'm going to change the size of the font on my Bossilator indicator just so I can show these lines a little bit easier. There we go. I could show those lines now a little bit easier. The safer entry comes we're at the 50% retracement mark at 25.56. I don't know if we're going to get that low. If this is really a resurgent risk-on type situation with Europe trying to resolve its problems, then we might see a bounce off of a level much higher than that. But let me draw this anyway. The safe entry, what I think is the safe entry anyway, is 25.60 or even 25.55 on the euro dollar 5-minute chart. That's a Bossilator trend trade entry, and I like it. I don't really see anything to not like about it. It's a textbook entry here. The only thing that we might have to deal with is the fact that we just might not drop back far enough to get the entry that we want.
Yeah, the only thing not to like is if you don't get it. Otherwise, it's fantastic.
And if you can hear us okay, let us know. We'd love to hear from you. We're glad that you're here this evening. Scott, I could show a bunch of other examples of trend trades on the currency market here, but there's about 4 things that you had prepared tonight that I think are absolutely fascinating. If we could spend the next 10 or 15 minutes looking at that, we can come back all the way around to the currency market again at the conclusion and take a look at a few other entries that are possible. So without further introduction, I'd love to make you the presenter and then have you walk through some of those things one by one.
Sure, love to.
So those are the trades of the night in the currency market. And I've made Scott the presenter. Nice to see Ned here. Nice to see Omar here. Hi, Robin. Hi, Les. Hi, Kevin, and everybody else. Kelly, it's nice to see you here, too.
I just got my show my screen button. Can you see me?
Yeah, I'm just increasing the size of the view of your screen so we can get a good recording. Looks great. Looks clean.
Well, last week we talked a ton about different methods of trading currencies. We talked about that euro-yen trade that we mentioned about 3 or 4 weeks ago and how that came to fruition. And we talked about different methods, whether we just trail the stop and do a pure trend or we do targets. So anyway, we did a lot of Forex last night for about 45, 50 minutes. So tonight I wanted to prepare stocks. You and I have been talking more and more about stocks, and we've said all along from the beginning that the Bossilator works fantastically on stocks,
Oh, yeah.
if not better. So I've got a few things in the stock market tonight, but of course they're all applicable. All these are applicable to any instrument. The only counter trend trade that I could find, and I follow all the currencies in about 180 stocks, is Nike, NKE, on the 5-minute chart. We had a gap last Friday. We had a huge gap down during the day, and it did a little bit of comeback, but it's not doing a whole lot. I would love to see a move on a break above the Bollinger Band. I would love to see a move back to the 800 simple moving average up here at 98.29. We're down here at 87. We've been away for 988 bars. So that's a long time for anything, but it's especially a long time on stocks. Plus, we've got a huge gap. So there isn't a lot in the counter trend world. This is my favorite right now, Nike 5-minute chart. I wanted to share that with everybody.
Yeah, that's fantastic.
The other thing I wanted to mention are a couple of other trend trading methods that we've mentioned before, along with the trifecta method that you just outlined. But I did some stats on a couple of famous stocks, Apple and Google, and I wanted to compare when is the best place on stocks to start getting into a trend situation. The first one we'll look at is Google, and I made it a little bit longer. I feel like we talk a lot about short-term charts. I'd like to do a little bit longer trend. 15-minute tends to be my favorite. I think 15 minutes is your favorite too.
It is, yeah.
I trade 1 minute. I do a lot of 1-minute trading and have done, but I'm just getting more and more fond of 15-minute charts. But anyway, here's Google, and the first one I want to look at is the breakout method, the slingshot method we've talked about many times, and that is when we're looking at trades to get in the beginning. We just look at Nike, which has been away for 988 bars. We're looking at the end of the movement. And as always, we're looking at the beginning of the movement on our trend. We want to get in as it explodes away from fair value, not at the end when it's due to come back. So this method looks at Google on the 15-minute chart between 0 and 100 bars away. Now, as always, the reason the course is created is you want to have reasonably small profit targets, or huge profit targets and reasonably small stops. So the parameters of this system, as they are with just about everything we trade, is traded 24 hours a day, which in the stock market means we just trade it when it's open.
Yeah.
Just trade it. Here is our input, between 0 and 100. We're only going to take it right as it breaks away from the 800 simple moving average. We're just not interested anymore. The stop loss, in this particular stop loss exit, is putting the stop at the low, which is how you taught me to trade in the first place. Go to the most recent previous low, and you put your stop loss there. This adds a little bit of buffer, though, because sometimes it comes right back down to the low and then goes right where you wanted it to go. And that's thoroughly annoying. So this builds in a buffer, which is 100 pennies beneath the low. And that's it. So it's $1 below. It's $1 below the low. Yeah, that's all it does. We're going to move to break even at $19. On Google, that sounds like a lot, but Google's $600 stock here in 2012, so it's not really that big a deal. We have the PSAR as always. The settings are at 9. Stochastics at 30, which is our favorite. Now the profit target is the big one. We're going for a 10-to-1 profit target. That's huge. It's huge. So we're putting the stop $1 below the low. We're going for whatever that number is. We're looking for 10 times that amount, and we're going to move the breaks even at $19.
And for those of you following along at home and saying, well, how do I apply this to what I'm doing? If you're an equities trader, you'd pull out the Google 15-minute chart, and you'd do the same thing that Scott's doing. Scott, you're waiting for a big explosion from fair value.
Right. And it's not necessarily, you don't even have to necessarily enter my way. I'll bounce off the Bollinger Band and the PSAR and Stochastic. You can get in any way you like.
That's
the thing to take away from this is the 0 to 100 and the 10 to 1 and the stop $1 below the low.
That is exactly right. You watch this segment of the program over and over and again, and these principles, the exact technique for the entry doesn't matter as much. And I know that is absolute blasphemy, Scott.
Yes, I know. But this is just a method that I like. I'm absolutely not convinced that it's the quote-unquote best method. It's just something that I've grown comfortable with, and I have just hundreds of hours of testing on. But there's probably one better, and pretty soon I'll probably find a better one. But for right now, this is what I use: a bounce down off the Bollinger Band, stochastic, oversold, and a PSAR. But that again is irrelevant. The important part: 0 to 100 and the 10 to 1. Over a period between, and this is when Google started trading, 2004 and now, and I just did very small shares. But what you want to look at here is $9,400 of profit and only a $3,900 drawdown. And as we talked about quite a bit last week, what this means is you're going to have to suffer in this 9-year period or whatever. You're going to have to suffer. The worst you'll ever have to suffer is about a $3,900 drawdown, about a $4,000 drawdown to get over twice as much profit, which is perfectly fine with me. Win rate's not that great, even with a break even. But
that looks spectacular to me. That win rate compared to some of the other ones we've been doing looks really good.
Well, that's true, and that's with the break even. But we're going for 10 to 1, so this is not bad at all to me. But some people may, I don't know. Like when I started, I wanted a higher win rate. That doesn't bother me now, but it's pretty good actually. Now, what's interesting about this method, what I wanted to show everyone, is here's the equity curve again from 2004. And, it wins, and then it draws down, and then it wins. We're in the midst of a drawdown right now, even through last year. Now, this doesn't trade a ton because it's a 15-minute chart, but doesn't this look very similar to this? In other words, the next Google trade could be a big one, is kind of what I'm trying to tell you.
Yeah.
If you traded off a 15-minute break off the 800, it looks like the next one. Because we saw drawdown here similar, drawdown here similar, drawdown here. Now, we don't know that for a fact, but statistics are kind of leaning that way. But I thought that was interesting. I want to compare that now to the method that I've talked about and the method that I trade live right now on the shorter term chart. But I'm waiting in that magic 200 bars away area. Now, and we've talked about this many times before also. Great trends start right around 200 bars away, when it's been away from the 800 about 200 bars. Now, why 200? Why not 10 or 50? because if you want to weed out all of that noise and break it from the immediate breakout, you need to wait about 200, and that's just what testing has shown. That's what statistics have shown. And if you go a little bit earlier, it moves back to the 800 and it pounds you and it stops you out and stops you out. So you're going to have to live with that. But the kind of the sweet spot has been right around 200 bars away. And if you want to get even more technical, it's about 180 bars away. And this has been true on my Forex trading that I do live. It's been true on my testing, and it's also true on Google when I tested Google in preparation for this webinar. About 180 is the number you're looking at. So you're going to get less trades, clearly. But what we're doing is kind of weeding out all the noise. So you're not trading the immediate breakout. Even though, for me, philosophically, if we trade it right from the beginning, it feels like we're definitely getting in on the ground floor. But if we wait for 180 or 200, we're going to miss all that nonsense, and we're just going to get in on the meat of the trend. So depends on what you like. Depends on how much you want to trade. But that's the exact same parameters, except what I've done is change when we begin. As you can see, we still trade 24 hours a day. There's your trend inputs, different. Stop loss is $1 below the low, and so forth. What's interesting about this, though, you get this equity curve, which actually to me looks a little bit better, and our profit is way more. We had, what, 9,000 to 3,900? And now we're looking at almost 27,000 to 30, same exact drawdown. So you'd only have to take about $4,000 worth of drawdown to make almost $27,000 of profit if you wait, which I thought was fascinating.
That's fantastic.
Yeah. So, I mean, I want to, because I'm eager, and I'm sure other people are too. You want to get in right off the break, right off the break. I want to get in. You know, it breaks away from the 800. This could be the one. But if you just wait, I mean, every time, and then you get your heart broken. And this is the one. This time it'll work. But if you wait for 200, or specifically 180, it's a lot smoother.
Well, like with dating, it's just a numbers game.
Right. Right. You're just waiting for it. You're waiting for prime time rather than just asking anyone out. Exactly. Just not anything that comes along. Same comparison here. I did it with Apple. This one's between 0 and 100 bars away. The profit target was slightly different, as every stock is just slightly different, but not much.
Right.
24 hours a day, between 0 and 100 bars. But our risk to reward, Apple is a little bit more violent. We're going for 12 to 1.
Apple's violent.
It's violent.
You'll probably get a letter from Apple's corporate attorneys.
Apple, yeah, they're going to sue me. The other thing to mention, which I don't think I mentioned, is we're only going long. We're not even going short at all. So that's why you get even fewer trades. Because shorting it's a different side of the market. It's different people. The profit targets everything's different. The whole mentality is different in stocks because stocks have an upward bias.
Right.
So
especially Apple has an upward bias.
Oh, Apple has an incredible upward bias. Yeah, it's incredible. So all this testing is for long only, and we can do separate short testing another time. But this is all long only. And between 0 and 100 bars away, get a very nice little equity curve, and we make 12,000 to only draw down 1,400. I mean, that's a big deal.
Over what period of time is that?
This is from 2000 to now.
Oh, well, no one's going to accuse you of not looking at a full enough time period. Apple didn't. Well, geez, I'm just wow. That's fantastic.
Yeah, I moved it back a little bit farther on this one. And you can see the profit target looks pretty good, or the equity graph looks pretty good. But then I compared it. I just waited on Apple. I wanted to wait a little bit longer. Same thing. We waited for 180 bars away rather than just getting in on the ground floor, trying to get it every single time. By the way, what was our win rate over here, just out of curiosity? Pretty good with the move to break even.
It was great, yeah.
Yeah, it's pretty good, which is surprising.
52% win percentage might not sound great to everyone here, but remember, it's very difficult to build a trading strategy that has winners that are 12 times bigger than the losers that has anything better than a 10 to 15% win percentage. If you can even get that. Right, yeah,
20% would be phenomenal. So the fact that just shows how violent, quote unquote, Apple is. I mean, when it gets long, it gets long.
Right.
And it's pretty amazing. But this is waiting for 180. What was our profit target here? 12. And we switch it over. It moves all the way up to 28.8 with the exact same drawdown, just by waiting a little bit longer. Again, our time period is 2000 to now, and there's your equity curve. Pretty amazing. So this is the method that I trade on Forex, but just as proof, or I mean, if you needed proof, that waiting for that trend to develop in an early stages away from the 800 works on stocks pretty darn well. And our win rate dropped, but our profits almost doubled, or more than doubled. That's kind of funny.
Here we are, just the only reason we're here is to try to confuse ourselves, and that's
Yes.
one way to do it.
Yes. So I thought that was interesting. I wanted to share that. I was looking through some stocks this weekend, and I wanted to share that. And that just, every time I do a round of testing, it just makes me feel stronger that, we're on to something that's pretty good.
I can't say enough about it, and every single thing that you've done here is something that anyone can really duplicate. The methodology and the rules are quite simple, and if it doesn't bother you too much, if we looked at that Apple 180 to 300 bars away, Scott, and you just maybe reviewed once again, how is it that you go about making these decisions?
Sure. There's a bunch of trades there. Let me scrunch it down. Do you want to see, does it matter what trade you want me to just do? Any trade?
Yeah, right, exactly. Just any trade, winner or a loser, doesn't matter.
Okay. This one here, and this is pretty recent. This is in June of 2012. What happened on this is the blue signifies, as you can see, between 180 and 300 bars away. So when it turns blue, I'm ready to trade.
Okay.
100, it means it's 180 away. I stop at 300, and I've tested this extensively. I'm pretty sure you already knew that 300 was the magic number. But if you get over 300, it wants to go back. You know what I mean? It doesn't want to trend anymore after 300. It wants to go back. So don't take any trades with the trend after 300, and that's Forex, stocks, doesn't matter. So all we're doing here is looking to go with the trend. Here's the 800 simple moving average. Instead of trading back to fair value, we're going to go with it because we're hopefully trying to get in the beginning of just a massive upward movement. We don't want to trade it back. We want to go with it. So we've gotten the green light here in the form of a blue line, a switch, 180 bars away. And I want it to bounce. I want a retracement, just as you showed at the outset. It turned 180 up here, but we don't want to just jump right in. We've got to have a reason. We want to have a retracement. And we mentioned this last week, too, when I was talking about my entry a little bit, that basically all I'm trying to do is find a retracement. I know what I want to do, and I just want it to come back to my price and then go. So all this has done is right at 180, it looks for a touch of the Bollinger Band anywhere. And we have touch, 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 touch it. After it's done, just touching it, running along the Bollinger Band, I'm looking for it to bounce up and then begin our trend. And it did here. Specifically, when am I going to enter? When the PSAR changes. And at this moment, the PSAR changes. Again, it could have been a steep trend line, which I love, and a break of that trend line. That's exactly the same thing if you want to draw it in a discretionary way. But the PSAR changes, and I get in. This went, the break even on this particular, on Apple, I believe is $4, but I want you to see. Move to break even is $4 on Apple. So price went in our favor, $4. It was a 576. It went up $4 on this huge bar. Moved to break even, came back down, and I got stopped out at break even.
And we're looking for, if I got this right, $48?
As far as
profit target?
How much profit target?
Yeah.
We're looking for a 12 to 1. So what we would do is, at this point, when we entered, we're at about 577. Stop is based previous low. And then, so we'd say 577, it's like $2.
Yeah. Okay.
So it actually places it $1 below, so $3. So $3 times 12 is 36. We're looking at about $40. About $40, 36 I think to be precise, is what we'd be going for. But we didn't get it. We only got 4 and moved to break even.
That's great stuff.
Does that make sense?
Yeah.
Okay. Then it does it again, and so we're still in the blue zone. So it hit the Bollinger Band again, PSAR changed, and it stopped us out. But it still was in the blue zone, so there's 2 stop outs and a move to break even, all the while we're making all this money. I mean, this is a horrible example, if you will. Oh, this is terrible. Nothing's ever going to work again. But meanwhile, all along for the last 12 years, we've been making $28,000 for every $1,500 we lose. Yeah, so I can go show a winner if you want, but that's how we get in.
Yeah, showing a winner is a great idea.
Let's take a little look. I'll look on my trade station. Does that just goes to the trade list, so we can go right to 12/30/2011 is what we're looking for. So let's scroll back. 12/30/2011. Oh, there's the magic blue line. And I'll move it back out. So what we did here, if nothing changes, of course, we waited for a touch. We got, and this was only a 1-bar touch. It got in right away. PSAR changed, and we're off to the races. Just right after and this is right around the holiday time too, right around the New Year, where we got a touch. PSAR fired off. Got a huge gap up that got us started, but it didn't come down and fill the gap. It just kept on going and going and going. And if I scrunch my chart back down, you see that kind of leveled off, got another gap, came down, oh, everything's terrible. No. And then a huge gap up, and it took us out right after this huge gap up for a winner.
There were plenty of people at $410 a share that said that Apple couldn't go higher. Just thought I'd mention that.
Well, according to this blue line, I think it's possible that it might go higher. It's possible. I don't know. Might be a fake blue line, but I don't think so.
Yeah, this is one of those companies that when you look back on it after a lot of years, you think, wow, all those times I thought it couldn't go any higher. And this will just keep doing it.
Yeah, I was in an Apple store, years ago, just looking at stuff at the time, didn't buy it, and it was at 90, and it just had a big run up, and people are saying, oh, I can't believe it's at 90. And now,
I remember talking with someone who had it at $100, and they said, well, I just got to get out.
Yeah.
And this was back in, if I've got my dates correct, back in 2007 or so. So I'm glad I recommended that they take the profit.
Well, that's another thing too. We've talked. Yeah, good, nice recommendation. That's what. Yeah, I think I told the Apple guy that 90 is pretty high too. I think I did that too. But this is just another for me. It's why I like to stick to the numbers, because how many arguments could you have made in this period? Oh, it's going down.
Right.
Get out, get out. I could have talked myself out of this trade about 100 times.
And what's the date? What's the date on that, if you don't mind?
The exact date. The entry date was 12/30/2011, and the exit was 1/25/2012.
So
not even a month.
December. Where's the gap?
The first gap is at 1.3, but this last final gap was at 1.25.
January 2011.
12, yeah. 1/3/2012 and 1/25/2012.
Yeah, I'm just looking there to see what came out. I'm guessing that at some point in time there was some earnings there or whatnot, but wow, just something else.
Mm-hmm.
Just incredible. Well, that's awesome. Anything else from your neck of the woods, Scott, as far as on that list that we talked about earlier?
As far as counter trend trading, I had an interesting occurrence last week that I just wanted to share with anyone. And I hate hindsight examples, and I know you do too. But it was, I think it was Thursday. I was just looking for some counter trend opportunities in stocks. And all I did that day was go to Yahoo homepage and look for biggest movers of the day.
I do that every single day. It's one of my favorite things to do.
It's just, I wasn't doing it. It did take 3 seconds, but I just clicked into it. and what came up was Arna.
I saw this one.
Did you?
Yeah, I did this one. Yeah, this is great.
Okay. So this was actually, it was 6:27 at the end of the day that I looked at it. Actually, yeah, it was at the end of the day, 6:27. I think that was Thursday. But I looked back and I thought, look at this humongous gap. And I'll open it up a little bit and I'll fill my screen up. Let me open up the chart a little bit. You see that there was this huge gap. But stocks that we've been talking about every day, on the TV or Twitter or whatever, are stocks that have been away from fair value. This is a 1-minute chart on ARNA. Been away from fair value for over 1,000 bars on the 1-minute chart. And right before this gap, if I were looking at smaller stocks, and if I were looking at ARNA, for example, if it was on my radar screen, again, this is hindsight, but I would have started looking at possibly taking this trade right here, a bounce off the Bollinger Band and a move back to fair value. Bounce off the Bollinger Band, move back to fair. So you could have easily taken this trade by every rule that we talk about every single day, and we'd be waiting for it to get back to fair value. But instead, especially if you're trading these smaller stocks, but instead of getting a move back to fair value, you get almost a 50% gap.
Right.
I mean, that's what the Bossilator can bring you. I thought that was fascinating because this followed the rules exactly. I didn't take this trade, of course, but
yeah.
Look at these are the possible fringe benefits of trading the Bossilator.
Yeah, this was one, I could even tell you, this is Arena Pharmaceuticals, and I actually pulled this up. It's just a biopharmaceutical company that is focused on drugs that make their way through the clinical stages of FDA approval and whatever. And I read the whole analysis of this stock. I looked at it. I thought about writing you and asking you if we could talk about it on Sunday, and it's one of those ones where you go, I cannot believe that I didn't talk to Scott about this, because it wasn't like part of one big list of anything. I just didn't email you at all. It was this one or nothing, and I had that sense about it, and I just didn't pull the trigger on talking to you about it, and I really regretted it later. But I did a whole breakdown on the fundamentals, and I thought, whatever. And the next thing you know, this thing it jumps up a significant amount. I think, what is this, a move of approximately 55, 60%? It was just a huge...
I think it's at least 50%. Let's say it was at 874, and then it opened at 13, so almost 50%.
Yeah.
Yeah, I think it's like 40, 50% on the open. And what I did too after the fact, because you've asked me, 100 times, do you care about fundamentals? Do you care about fundamentals? And every time I say no, I don't care. I don't care about the news. But what was happening in Arena was they were waiting for a drug to be approved. Right. I didn't care about the drug, and they've been waiting for a while, but I didn't have to go through all that. All I had to do was wait for 1,000 bars, and then start looking at it the same day, and it popped the next day. You could have skipped the literal years of waiting, or months anyway, of waiting for this to be approved. Is it going to be approved? And all I can do is wait for a Bollinger Band touch and 1,000 bars away, trade it back to fair value, and get the same thing in 24 hours. I thought that was pretty cool. I
love that about it. And there's something about knowing the fundamentals that interests me. And I have to admit at the same time, if I had known the fundamentals on this, Scott, and I had watched this, there's no way I would have traded it, because I would have said, "Oh, I don't want to get out in front of a FDA approval."
Absolutely.
And the next thing you know, that's exactly what you would want to do. I mean, that's the first thing that you'd want to do. Well,
I mean, going here, this drop here is like, oh, it's not going to get approved. You could say, oh, it's dropping. Oh no, look, they must know something. Boom.
That's so hilarious.
I think that's funny.
Well, I'm going to pull up a 1-hour chart on the New Zealand dollar, U.S. dollar, and take a look at that. Unless you've got something else that you'd like to look at.
No, those are my most important things of the night.
I thought we'd made it through. And showing you my screen now, and this is a look at the final Bossilator trade of the week. I don't like it as much as the ones we looked at earlier in the program. I really liked that Australian dollar Japanese yen trade, so if you don't mind, that's the one that we'll focus on. I like this New Zealand dollar US dollar. I don't like it as much. Once again, I've said that already. This is the 1-hour chart. It's been away from the 800 period simple moving average for 291, and a drop down would possibly present an opportunity to buy this currency pair on the 1-hour chart for what could be a significant move to the upside. The problem with this is, and Scott's already identified it, and for those of you that are reasonably new or forgot the way that this particular system works on trend trading, we wait for the currency pair or financial instrument to reach 200 bars or candles away from the 800 period simple moving average, then wait for a retracement, and then trade it back upward. Well, we got that retracement and we got the trade already. It already happened. And so it makes it difficult at this point to say there's a great trend trade opportunity in the New Zealand dollar. Although there is one. The really great opportunity already came and went on this 1 hour chart, and so I don't like it as much. However, if we get just a shallow retracement on this 1 hour chart down to the 23% retracement level at 79.50, and I will write that level on my chart right here so you can all see it. 79.50, that's 76.50. That would be the buying opportunity of a lifetime, but that's not going to happen. Sorry. 79.50 is right here, this 23% retracement level. If we drop to that level, that's a buy trade opportunity on this 1 hour chart. I do like those Aussie yen. I like that Aussie yen trade and the euro dollar trade better. But here's an opportunity on the 1 hour chart. If we get a reasonably significant 1 hour retracement of 50 pips overnight, drop to 23.6 retracement, 79.50. That's a buy trade on this currency pair, and then a move up to at least 80.30. But I would go for 100. I wouldn't even go for 80. I would go for 100 pips at least on that trade. At least on that trade, Scott.
Yeah, to make it worth your while, I think.
Yeah, especially in a market like this where if it's risk on, it's really risk on. And I say that for one important reason. If the euro dollar does jump up, there's this level 27.50, and if we look at the 4 hour chart, we can see it again. 27.50 has been hit repeatedly, not just recently at the middle of June, but previous to that, 27.50 was hit repeatedly in May, and 27.50 was hit going much, much further back from there. Let's see where 27.50 is down here. So 27.50 is an area of consolidation going back to January when Apple was at $400 a share. I still can't believe that. And so on and so forth down on line. So 27.50 is an important level, and it's possible that we will return to that level. If it's truly all risk on, then that is a great level in the euro dollar. And that translates into about a 100 pip move on a move upward on that New Zealand dollar, US dollar chart as well. Scott, it's been a pleasure to spend some time with you. I hope you get back into your house soon and the storm's past. But there is another storm coming through your area, right?
Yeah, I think we're done with it. It got a little scary again with some lightning and some dark clouds, but it's sunny now, actually, as a webinar, so that must be a sign.
It's sunny now?
Yeah, it's got a little bit of sun coming out after this huge thundercloud rolled through. Yes.
Wow, it's late. It's late. I love those long summer days.
That's right.
All right, without the storms. Well, thanks for joining us, everyone.
Yes.
I've recorded this webinar, and it will be up on the Bossilator website if you'd like to watch it again by tomorrow morning or so. Scott, thanks again.
All right, we'll see you next time.
Thanks, everyone.